Well, I'm sorry I've been out of touch for the last couple of weeks. Things have been kind of hectic, mostly for good reasons. Anyway, just jumping in real quickly. Today is a good day to jump in, actually, because we did see a little bit of sanity come back to the markets and a little bit of a pullback. Not enough, in my opinion, but certainly, a move that at least rhymes with the technicals. Here's the 100-day for the S&P. Note the yellow channel, which has really been our consistent drive up to higher and higher levels after that last little mini correction that we had back in January. At any rate, I did report in one of my last three video blogs, that I thought we were starting to wedge, and we see some clear evidence of that, where the tops are not reaching up to the top channel resistance line any longer. They're kind of failing earlier and earlier. And we also see a little bit of bunching on the lows right around our support line in the channel. So that's a wedge. That's a rising wedge, and rising wedges usually break, and they break fairly sharply eventually. And I expect that we're setting up here for a bit of a pullback. Where will we pull back to? It really depends on how much further out of the wedge we go. But I would not be surprised that that this thing tries to make its move out to that 1200 mark. That 1207 would correspond to what I reported earlier would be a normal extension beyond beyond the December-January highs in the 1150 area. So 1200, I wouldn't be surprised if we saw that on the S&P, but we may not even get there. We will pull back. We will certainly pull back to the 20-period moving average, which is going to be somewhere in the 1170 area. That's not very big of a pullback, 13 points from where we are today. We'll probably see a test of this bottom Bollinger Band, which is in that 1157 area, 1160 area, and I would not at all be surprised if we test the December-January highs, support around 1150. If we do break that, then I'm looking forward to a test of the 50-period moving average in that 1120 range, 1130 range. And following all the way down, and ultimately, my position, I would certainly like to see us get to a real substantial correction. Anyway, I thought it would also be helpful to quickly put in perspective with the weekly chart over the last 3 years. I could take this out to the last 20 years or 10 years, but 3 years is fine right now. Just note that we do have a fib grid that roughly indicates that the 200-period moving average and the 62% retracement do align fairly nicely, right around that 1230 area. Again, I really don't think we're, you never say never. I don't think we're getting there. I do think that we are in a final wave here. For you Elliott wave theory guys out there, I see a 1, 2, a 3 with a little interruption in it, a 4, and then a 5. And I think we're really melting up to the end here. Looking at the RSI, even when we were at the peak of the bull market, we were already coming down off the overbought areas, and we haven't been this overbought on the weekly chart in quite some time, and certainly over 3 years. And I just think this has gotten a little bit too hot for its own good. And again, evidence is here that be patient, and I would not be surprised if we see a nice 50% pullback on this entire this rally for the last year. When it starts, it's going to start, and it's going to get pretty violent. In fact, if we breach below 1150, I don't think there's a lot of people who bought in above 1150 are interested in sticking around, or anybody who bought into this rally early on. I think they're all going to see the wave pattern here, and they're going to say, hey, look, we're talking 50% retracement back. So you tell me 50% from, let's say rough it, 670 to, roughly 1200 or in that area, you're looking at a 500 point 250-point decline on the S&P. Most people are going to kind of start bailing here. So, I would say that's what the charts are suggesting. Pretty bold, huh? Also, I want to just quickly go to the 60-minute chart, just to point out that, again, I'm a big, I'm a big fan of using RSI, and when we see clear divergences in the RSI, we have a high that was set here with an RSI pretty strong. We had a new high with a lower RSI, and we continue to set even higher highs with even lower RSI, and we haven't gotten down into the oversold zone in a long time. Yeah, we are getting a nice bounce off of this, and today we saw a pretty strong bounce, almost like the computer programs went into high gear when we bounced off of this lower support trend line. But again, this is getting long in the tooth. It's getting a little bit tired. I don't expect that we're going to have such stellar earnings, frankly, and I think it's time. I think that we're actually seeing the beginning of the official full correction that we've all been waiting for, and I'm happy to say that I remain entirely short. I've been doing some scalping here and there. I've got it all on the line, and I intend to increase with some leveraged instruments. So there you have it. There's the skinny.